spotlight on India's investment banking space then. We are now joined by Mr. Nipun Goel, President and Head Investment Banking, IIFL Capital, and he's joining us from the sidelines of IIFL India Conference. Mr. Goel, afternoon. Thank you so much for joining us here on ET Now. First up, let's talk about current fundraising environment in India. In 2025, we have seen a whole host of IPOs, a lot of action in the primary market. How is that translating into the investment banking landscape, and how has the trend been in the entire fundraising landscape?
So look, right now, we are coming off a year where we saw intense ECM activity. There were about 103 IPOs on main board last year. And, right now, as we speak, I believe there are more than 170 documents which are filed with SEBI. So to that extent, there are a large number of companies which are wanting to tap the capital market this year. Last year, we raised close to, $20 billion, from the primary markets through the IPOs. I expect this year we are likely to surpass that number.
Also, talk to us about the pipeline for IPOs. How strong and sustainable is the current IPO pipeline?
So look, right now, as I mentioned, there are more than, 170 companies which have filed the documents with SEBI. Markets, of course, over the last few months has been volatile, and the first few months have seen limited IPOs. Having said that, I believe once I think things stabilize on the geopolitical and the tariff-related uncertainties, I expect the next few quarters could be far more robust. Just to give you an idea, last year there were 103 IPOs on the main board. First quarter saw 9 IPOs. Second quarter saw 9 IPOs. Third quarter saw 46 IPOs. And the fourth quarter saw some 30 plus IPOs. So to that extent, activity can tend to be lumpy as we have seen in the past. As I mentioned earlier, I think I expect the fundraising volume this year to surpass what we saw last year.
Right, so fundraising this year is likely to surpass what we saw last year. That's the word coming in. But Mr. Goel, let's also talk about valuations. Are valuations now more realistic as compared to post-COVID peak? And what is your view on the equity capital market activity that we're seeing within the investment banking ecosystem?
No, absolutely. Look, post-COVID, of course, we were in an environment where the cost of capital was, virtually close to zero. So to that extent, valuations were elevated. Having said that, in the last few years, I think there has been a fair degree of moderation insofar as valuations are concerned. I think more importantly, most of the companies and issuers are also recognizing IPO is not really the value unlocking event. The idea is to establish your currency well in the market, make sure the stock is rightly priced, and more importantly, rather than optimizing the valuation, I think the endeavor is now to optimize the investor base at the time of IPO. And once the company performs on a quarterly basis post-listing, valuations kind of find their own true level over a period of time.
Right. Also, which sectors will drive the primary market activity over the next year?
So I would say right now, I think the activity is quite broad-based, if you will. So look at it this way. Investors in public markets are generally looking to invest for growth. And right now we are seeing a lot of growth coming from, some of these new age sectors, if you will. So to my mind, in the next 12 to 18 months, you will probably see 30 to 40 listings happening from the new age sector. So they are going to be providing a fair bit of supply in the market. Having said that, it's not that investors are focused on one sector versus the other. It is a more, I would say, bottoms up, company specific kind of thing. So long as they find the right combination of growth and governance, then enough and more capital, which is available to fund such companies.
Clearly. So we are seeing a lot of action in the public equity market space. But Mr. Goel, what about private equity? Do you think that momentum in private equity will slowly start returning in India in the next few quarters?
No, absolutely. In fact, if you see right now, the private equity dry powder is probably at lifetime highs in India. In the last 18 months, there have been enough and more India dedicated funds which have been raised, and they are actively looking to deploy capital to work. And my sense is that market is only going to, expand further. While there are 170 odd documents which have been filed with SEBI, my hunch is, some of them, would probably actually go the private equity route as well.
Right. Also, promoters are more open to strategic dilution and consolidation today than they were before.
No, absolutely. Right now, I think we are in a stage where big is beautiful. So to the extent there are consolidation opportunities available in the value chain in which some of these companies are operating, both the buyers are quite open, and even from some of the companies perspective, I think till 10 years ago selling businesses in India was considered a taboo, if you will. Increasingly, as the next gen is taking charge, a number of them are open to evaluating strategic options with respect to businesses. So my sense is that trend is likely going to accelerate.
Right, so the activity is likely to accelerate. That's the word coming in within the investment banking landscape. Mr. Goel, thank you so much for taking your time out and joining us here on ET Now from the sidelines of the conference. With that, it's a wrap on this edition of the show. Thanks so much for tuning in. Closing trades will take you through the next 1.5 hours.